Okay, let's unpack this. We've got some really interesting material here looking at how airlines, well, how they actually turn a profit.
Yeah, specifically looking at the economics behind the different cabin classes, economy versus business.
Right. Because it's not just about filling seats, is it? There's more going on.
Much more. It seems you're keen to understand the real profit drivers in this industry.
Exactly. We have this detailed report, dives deep into passenger experience, the pricing, the costs involved, where the revenue actually comes from.
And that whole strategic science of how they decide who sends where and for how much.
hmm So our mission, let's say, for this deep dive is to cut through all that complexity.
And pull out the key insights, yeah. How these different cabins really contribute to an airline's bottom line.
Get ready for some surprises, I think. This might
Well,
just change how you look at your next flight.
well, what's fascinating right off the bat is just how thin the margins are in this business.
Really thin, right?
Yeah, we're talking net profit margins maybe, what, just a few percent? Despite huge global revenues.
So figuring out where the actual profit comes from, especially when you break it down like this, by cabin.
It becomes absolutely crucial for these airlines just to, stay in the air.
Absolutely. And like we said, it's not as simple as just getting bums on seats.
Not at all.
So let's start with the obvious bit, the passenger experience.
Hmm.
What you actually get in economy versus business, it's vastly different.
Night and day, really.
For most people, economy is the baseline. Think, affordability, volume. Seats are usually around 17, maybe 18 inches wide.
Something like that. And legroom, maybe 30 to 32 inches. Though some are a bit better, some less so. Especially the budget carriers.
And recline is often, shall we say, minimal.
Basic meal, limited drink selection, maybe a small screen, functional service. Standard baggage like 20, 25 kilos. No lounge access, obviously.
It's about getting from A to B functionally.
That sums up the core economy product pretty well. And like the report says, it's not all the same. Your full-service carriers usually offer a bit more than the ultra-low-cost guys.
Right. And we're seeing more of that economy plus too, aren't we? Pay a bit extra, get a few more inches of legroom.
Yeah, that whole trend of unbundling, even basic comforts, charging extra fees, we'll definitely come back to that. It's key to profitability now.
Okay. Now let's hop over the curtain to business class. It's a completely different world.
Totally different ballgame. Comfort, productivity, service,
Mm.
all commanding that premium price.
Lie-flat seats, or at least steeply angled ones, that's pretty much standard now on long flights, right?
Oh yeah, definitely for long haul. And they're wider, maybe 21 inches plus, significantly more legroom too sometimes, like almost 7 feet of pitch.
Wow. Those cabin layouts, more privacy often that one-to-one setup.
Exactly. So almost everyone gets direct aisle access. No climbing over neighbors.
That seating is really the core of it, isn't it?
It really is. Those lie flat beds, they're not just about luxury, it's strategic. Business travelers on overnight flights need to arrive rested, ready to work.
That's the value proposition they're selling.
Fundamentally, yes.
And the perks keep coming.
Yeah.
Gourmet meals, like
Oh.
multi-course
The
things.
fine wines, yeah. Big screens, noise-canceling headphones, proper bedding, amenity kits.
Sometimes even pajamas.
Sometimes. And the service is much more personal, lower passenger-to-crew ratio.
Right, plus all the ground stuff. Priority check-in, security, boarding, bags come off first.
And the lounges. Can't forget the lounges. Escaping the terminal chaos, free food, drinks, Wi-Fi, maybe even showers.
Plus more generous baggage allowances, usually 30, 35 kilos or more.
It's a whole package, ground to air.
It really is a night and day difference. Comfort, convenience, a bit of pampering. The report even has a table laying it all out side by side. Seat type, width, pitch, food, IFE, ground services.
It's useful to see it all listed, and what's really interesting is how airlines seem to be deliberately widening that experience gap, as the report calls it.
How so?
Well, they keep upgrading business better seats, fancier food, while in economy, the focus is often on essentials, maybe even stripping things out to charge extra fees.
Ah, okay. So it makes the value of business class seem even clearer.
Exactly. It helps justify that big price difference, and it also creates that space in the middle.
For premium economy, which seems to be getting more and more popular.
Precisely. It's smart product segmentation, catches people willing to pay more than economy for, noticeable upgrades, but maybe not the full business fare.
Okay, so the experiences are worlds apart. Now let's get down to brass tacks.
Yeah.
The price, the cost of comfort, as the report frames it.
And the difference is often, well, staggering,
We're talking business fares typically 2 to 5 times higher than economy.
at least. And on long haul, it can be even more, maybe 4 to 8 times, sometimes more.
Oof, that's huge. The examples in the report really hit it home. London to New York, economy might be, say, $500 to $800 round trip.
Yeah, and business on that same route often starts upwards of $2,600. Easy.
Even Zip Air, that budget long-haul carrier, their full flat seat to Tokyo is way, way more than standard economy.
Several times more, yeah. It shows the principle holds even for budget models offering a premium product.
And thinking about upgrading at the airport or something.
Yeah.
Not cheap.
No way. Hundreds, maybe thousands of dollars, depending on the route and how full the flight is.
And premium economy sits in that gap, maybe 50 to 100% more than economy.
Roughly, yeah. But still significantly less, maybe 65% less than full business.
So connecting this to the bigger picture, why the massive variation? It's not random, is it?
Not at all. It's driven by a whole bunch of factors. Route length is a big one. Longer flights command bigger premiums for comfort.
Makes sense. Booking time, too.
Definitely. Business fares often jump up closer to the departure date, catching last-minute business travelers. Then there's basic supply and demand, competition on the route.
The flexibility of the ticket, can you change it easily?
Exactly. And the airline's overall brand strategy, are they positioning themselves as premium or budget?
Which brings us to the big question. Why such a huge multiple? It can't just be the cost of the fancier meal and the bigger seat, surely.
You're absolutely right. It's much more than just the direct costs. It reflects the perceived value.
Like being able to sleep flat, work productively, arrive refreshed.
Precisely. The convenience of priority services, maybe even a bit of status. But crucially, it's about what airlines think certain markets, especially corporate travelers, are willing to pay.
Ah, the willingness to pay factor.
Yeah. They use sophisticated techniques, yield management, we'll get into that, to maximize revenue from these high-value passengers.
So it's less about cost-plus pricing and more about value-based pricing.
Very much so. And that big price gap, it also creates opportunities for them. Selling paid upgrades, running bidding systems, letting people use frequent flyer miles.
Right, capturing revenue from people who might pay more than economy, but not the full walk-up business fare.
Exactly. It's all about maximizing the revenue from every single seat on that plane.
Okay, let's peek behind the curtain then. The cost structures. What does it actually cost airlines to deliver these different experiences?
Well, the big operating costs are things like fuel, labor pilots, cabin crew, ground staff maintenance, aircraft ownership or leasing costs, airport fees.
And then the passenger service costs.
Yeah.
Catering, amenities, lounges, sales, marketing, admin.
It's a long list. Some are fixed, some vary with passengers or flights. And allocating those shared costs like fuel or crew across different cabins, that's tricky.
How do they track overall efficiency then?
Often using metrics like ASM cost per available seat mile, how much it costs to fly one seat for 1 mile.
But that's an average across the whole plane, right? Doesn't really show the cabin difference.
Exactly. It's a blended figure. So for economy, the name of the game is efficiency. Keep costs down to support those lower fares.
Maximize seat density. Squeeze them in to spread the fixed costs.
Pretty much. Lower per passenger costs for simpler food, fewer amenities, higher passenger to crew ratio.
Standard stuff, but business class. The costs must rocket up.
Significantly higher, yes. First off, those lie-flat seats. They're incredibly expensive pieces of engineering.
To buy and to maintain, I bet.
Definitely. And then there's the space they take up. That's a huge opportunity cost, as the report notes.
What do you mean opportunity cost?
Well, the physical space one business seat occupies could fit several economy seats.
Ah, right. So that space could be generating revenue from multiple economy passengers instead.
Exactly. Which means that single business seat absolutely has to generate massively more revenue to justify its existence, economically speaking.
That makes perfect sense. And then add on the higher quality catering, premium drinks.
The fancy amenity kits, the investment in building and running those exclusive airport lounges.
The costs just keep piling up. The report mentioned a potential meal cost difference of, what, $85 per passenger per flight?
Around that, yeah. And lounge access, if an airline has to pay for a partner lounge, could easily be over $100, maybe $125 per visit per passenger.
Wow. And first-class food costs could be like 20 times economy?
The numbers can get pretty extreme at the very top end.
Plus, potentially lower passenger-to-crew ratios for that more personal service. And higher baggage allowances mean more weight, more fuel burn.
It all adds up. It's not just the visible luxuries, it's the entire ecosystem supporting that premium experience.
And that space issue is critical, using valuable real estate for fewer high-paying customers.
Which explains the trend we've seen, right? Airlines reducing or eliminating first class, focusing instead on enhancing business and premium economy.
Trying to find that sweet spot for profitability per square foot.
Exactly. Optimizing the cabin mix is constant work.
Okay, so we've got the experience, the price, the costs. Now, revenue. Where does the money actually come from?
Well, obviously the revenue per seat is way higher in business because the fares are so much higher.
But the report says revenue per square foot is maybe a better metric for efficiency.
It's certainly more revealing about how effectively they're using that limited cabin space.
And how does that stack up?
Generally, analysis shows business class leads the pack in revenue per square foot. Premium economy is often pretty close behind it.
And first class, given the huge fares.
Surprisingly, first class can sometimes underperform on this metric. Why? Because the density is so low, very few seats taking up a very large area.
Huh. So the highest fares don't always mean the most efficient use of space.
Not necessarily. And economy, despite having all those seats,
Generates the lowest revenue per square foot because the fares are low.
exactly. One analysis even suggested first might generate the least revenue per square foot once you factor in all the high associated costs.
That's really counterintuitive.
It highlights that trade-off between price, volume, and space efficiency. It's a complex puzzle.
Now, load factors, how full the plane is, that must matter hugely too. High fixed costs mean empty seats are bad news.
Absolutely critical. Airlines need high load factors, often 70–80% overall, just to break even.
But business class can be profitable, even if it's not completely full.
Correct. Because the yield, the revenue per passenger, is so high, it can cover its share of costs and contribute to profit even at lower load factors than an economy might need.
But an empty business seat is still a lot of lost potential revenue.
Oh, absolutely. Significant lost revenue. Industry average load factors are generally high, though, forecast over 82% for 2024. Airlines work hard to fill those planes.
And the data on how much each class contributes overall, it's pretty stark, isn't it?
Very. Premium classes generate a disproportionate amount of revenue compared to the number of passengers flying in them.
The report mentioned pre-pandemic, premium traffic was maybe 7% of the miles flown by passengers.
But brought in around 20% of the revenue for full-service carriers.
And that trend has gotten even stronger since.
Seems so. Q1 2024 data, for example, from Middle Eastern carriers, showed premium was about 8% of passenger kilometers, but a whopping 27% of revenue.
Wow. And business travelers.
Yeah.
What was it, about 12% of passengers?
But can be twice as profitable as leisure travelers, potentially contributing up to 75% of profits on some key routes.
And generate, on average, like 4.3 times more revenue per booking.
The numbers are significant. It shows just how vital that premium segment, especially corporate travel, is to the financial health of many airlines, particularly the big network carriers.
But, and this is a big but, overall airline profit margins are still razor thin. A few percent.
That's the paradox. Average profit per passenger is forecast at maybe $6 or $7 for 2024-25.
So even with those super profitable business passengers, the sheer volume of lower-yielding economy passengers pulls the average way down.
Exactly. It highlights the scale challenge.
So here's where it gets really interesting. For the big long-haul airlines, profitability seems to hinge more on yield, getting those high premium fares,
Than just on volume filling up economy.
the profit from selling one more business seat can outweigh the profit from selling several economy seats.
Absolutely. And that fundamental economic reality drives everything. Cabin configuration, pricing strategies, it's all about maximizing profit per square foot.
It really is about squeezing the most value from every inch of that aluminum tube. So how do they manage this incredible pricing complexity? That brings us to yield management or revenue management.
Right. It's this blend of art and science. The goal is simple in theory. Sell the right seat to the right customer at the right time for the right price.
To maximize revenue from a perishable good, that empty seat vanishes once the door closes.
Precisely. It's a constant balancing act. Fill the plane, load factor, versus get the highest average fare yield.
And it involves a ton of data and forecasting.
Oh, yeah. Sophisticated demand forecasting, understanding different market segments, setting different prices, dynamically controlling how many seats are available at each price point.
So tactics like dynamic pricing curve, prices changing in real time based on demand, competitor actions, booking pace.
And those fare buckets we talked about. Multiple price levels within each cabin, each with a booking code and rules.
So in economy, you might have loads of different price points to capture everyone from the super budget conscious, book way in advance traveler to the last minute person who needs to fly.
Exactly. Lots of buckets to match wide price sensitivity. In business or premium, there are fewer buckets. The focus there is more on maximizing the yield from those willing to pay the premium.
Protecting seats for potentially high-paying, late-booking business travelers.
Right. They don't want to sell all the business seats cheap months in advance if they expect corporate clients to book late at a higher fare. Flexibility is often built into those higher fares, too.
And those fences you mentioned, rules like advance purchase, minimum stay, non-refundable.
Crucial for segmentation. They stop the high-yield business traveler, who needs flexibility, from buying the cheap, restrictive leisure fare. It forces people into the fare category that matches their needs and willingness to pay.
Makes sense. And we can't forget ancillary revenues in all this. Baggage fees, seat selection fees, food, Wi-Fi, upgrades.
It's massive now, hundreds of billions globally, hugely important for low-cost carriers, but increasingly vital for full-service airlines, too.
And it ties back to the cabin classes, doesn't it? In economy, lots of things are unbundled. You pay extra.
Whereas in business, most of that is usually included in the higher upfront fare. Selling upgrades is also a key ancillary strategy, moving people from economy to premium or business for a fee.
So boiling it all down, yield management is basically sophisticated price discrimination.
Essentially, yes. Charging different people different prices for broadly the same thing, transport from A to B based on their perceived value and willingness to pay.
And unbundling in economy kind of makes the all-inclusive business ticket look more attractive, maybe pushes people to upgrade.
That could definitely be part of the psychology, yeah. It reinforces the value proposition of the premium cabins. It's all interconnected, aimed at optimizing revenue.
Okay, so let's finally get to the bottom line, answering that initial question. Who really pays the bills? Which cabin is more profitable?
Well, the evidence seems pretty clear, and the consensus in the industry backs this up. It's the premium cabins, particularly business class.
They're the main profit drivers.
Overwhelmingly so. Because of those much higher yields, the disproportionate share of revenue and profit they bring in, driven heavily by those business travelers and their superior profitability per square foot.
So the view is that premium cabins generate most of the actual profit, while economy might just be covering its own costs, or maybe a bit more.
That's the general picture, yes. Economy might operate on very thin margins, or potentially even be loss-making if you allocated all costs perfectly, but
Economy is still essential.
absolutely essential. It provides the volume, it builds market share, and crucially, it covers a huge chunk of those high fixed operating costs. The plane, the fuel, the crew costs that exist regardless of who's sitting where.
And it's a platform for all those ancillary fees now, too.
Exactly. So you can think of economy as the backbone, the foundation that allows the more profitable premium cabins to exist and thrive on top.
Okay, so summing up the profit picture. Profit per passenger, way higher in business.
No question.
Profit per flight, heavily influenced by the mix, but more business passengers significantly boosts it.
Definitely improves the overall flight economics.
And profit per square foot.
Yeah.
Consistently favors business and premium economy over economy.
Correct. That space efficiency metric really tells the story.
So the definitive conclusion is,
Business class and premium cabins in general contribute much more significantly to airline profit margins than economy class does, especially per passenger and per square foot. Economy provides the volume, covers costs, and increasingly relies on those extra fees.
it's like airlines are running two different businesses on the same plane.
That's a great way to put it. A high-volume, low-margin business in the back, economy, and a high-yield, lower-volume business up front, business premium.
And managing that mix is the critical challenge.
Absolutely. But even with profitable premium cabins, we have to remember the whole industry operates on shaky ground sometimes. High fixed costs, intense competition. Overall profitability is fragile.
That's a crucial point. Those premium profits are vital, but they don't guarantee smooth sailing for the airline overall.
Exactly right.
So there we have it. A pretty deep dive into the fascinating economics of flying. It seems clear that while economy gets the most passengers,
It's those seats up front, especially business class, that are often providing the crucial profit margins.
makes you think differently about the plane next time you board, doesn't it? All the pricing strategies, the way the space is carved up.
Definitely gives you a new perspective on that complex money-making machine.
We hope this deep dive has done that for you listening. What really stands out to you from all this? Does it raise other questions about where air travel is headed, how cabins might change in the future?
Yeah, things like the growth of premium economy. Will business class continue to evolve? What about ultra long-haul flights? Lots to think about.
Definitely something to mull over next time you're picking a flight or sitting in seat 38B.